All right, why do markets trend? So what drives a trend? When buying or selling pressure dominates for an extended period of time, a trend develops. Trends happen on all time frames and for all sorts of reasons. Short-term trends are usually generated through the news cycle, as where longer-term trends are fundamental in nature, such as supply/demand imbalances. As those imbalances persist, long and exciting trends can emerge. So as a trend develops and throughout its life, there are periods of time where trader sentiment causes markets to heat up and deviate significantly from the larger trend, which we have discussed are usually caused by greed and fear. This is the market being a market being inefficient. Throughout these courses, a constant theme of trading with the trend emerges. Part of the reason for that is once you have a solid understanding of what drives a trend and how they persist, then learning to take advantage of those nuances becomes the most obvious and easiest choice. Trading is already hard enough and no reason to make it harder. As you will learn, it does become necessary to trade against the trend at times, but it is because of well thought out logical reasoning. The market leads and we follow. Alright, supply and demand. There are certain instances and scenarios that cause supply and demand to become out of balance and create excellent opportunities. Example, it's 2021 and due to COVID, lots of industries slowed down or stopped production. Once restrictions started to lift, demand for virtually everything happened all at once as the economy started to be productive again. The price of lumber quadrupled as demand for housing hit new highs, yet little wood was available to build homes. In March of 2020, the price of silver dropped from $20 down to $12 and then went to $30 in months. Most temporary extremes do not properly represent the current value of an asset, over and undershooting its perceived value, creating opportunity. So we're going to go into this in great depth in the next couple of courses, but this is just kind of a primer for that. We're talking about, we're getting a little bit deeper of exactly what causes things to happen and what creates potential opportunity. But these are very real, right? So once we understand how to trade, how to look at opportunity, have our chart reading skills and everything down, and then have a strategy built around that, then we can absolutely take advantage of these, right? The silver, just to throw it out here, you know, I own physical silver. I think that it has great potential in the future, but I also like to trade options with it whenever I can, whenever I spot or think that things are going to trend well. And so I bought, you know, so long, like I think it was like January call options at like $13 here. You know, I bought it when it was like probably like $13 for this is the SLV. I mean, I made a crap ton of, I think I bought it for like $150 a piece and I sold them for $1,500 a contract, you know, somewhere up in here. It was just absolutely insane, right? So where preparation meets opportunity is like, that's what we're looking for, right? So, anywho, moving on. All right, volatility. Volatility is in essence how much a financial asset moves. I've seen many people and media outlets discuss volatility as a bad thing, when in reality, you just need to have a healthy understanding so you can respect it. We want what we are trading to move. It's how we make money. In 2018, I recommended Bitcoin to my dad at $4,000, and his response was that it was too volatile. It hit $65,000 this year. That's my kind of volatility. You know, it seems crazy. Extremely important if you are already or are considering day trading. In that environment, volatility equates to daily opportunity, which is what makes it worthwhile. I would say most importantly, we need to have a solid grasp of how we can utilize a combination of instrument volatility and leverage to fit our situation and create the return potential we are seeking. We will discuss how to measure volatility so that we can apply it to our trading and how to integrate leverage and depth in later courses.